Hello guys, welcome to another weekly breakdown video. Today I will be breaking down the second week data of December for you guys, as we also knew that December tends to be the low volatility month, because on December most of the people are on holidays. They're not trading, not on the charts mostly. That's why, and also the banks are not that active due to the slaves of the banks go on holiday, right? So that is the exact reason we don't. But also there is not enough reason for us to not trade on December. Obviously we'll look for trades, and showing you the news the second week of December, you can clearly see it was a week full of news, with huge amount of news, and every single day there was news from Tuesday till Friday, and every day was high impact, like CPIs, PPIs, federal funds rate, interest rate, you name me any high impact news that affects the economy of the country. Every news was present in a week itself. So this gives us the indication that it was not a high probability week to trade, even though I am backtesting. That's why I will be looking for trades that align with our bias and align with our strategy, being the AMD. Also you can say Asian range liquidity sweep model. And the only day that is not filled up with news is Monday, and also I am backtesting to figure out if I will trade Mondays or not. So it also made sense to look on trade on Monday. So now let me quickly show you the weekly bias. On the weekly time frame, I've drawn the supply, change of character, targets. Obviously I draw the supply zones, demand zone, I've told a gazillion of times, and why that supply zone is valid, and the targets. Going to the weekly, next week my bias is clearly bearish, because I select my bias according to the weekly candle how it closed. But even here we can see bullish, bearish. Next week looking for sales, it was literally wrong. We were totally wrong. We can be wrong in the market. Obviously the market can literally continue up, and does that mean that we have done something wrong? No bro, you just followed your plan, you followed what works for you, no problem. And on DXY, the main bias selection what happened on DXY, I have marked this demand zone here and this break of structure. The market was making higher highs, higher lows. 2 weeks regularly has given us bullish indication that the DXY is now bullish, and also there was a huge fair value gap here on the weekly, which can be filled, and it made so much sense for DXY to go and fill up this fair value gap. So automatically our bias for GU being bearish is strengthened. So now we'll go to the daily, and the daily is now reacting off of this supply right here. There is a break of structure here. You can also argue there is a demand here on the daily time frame. So going on the daily is now making higher highs and higher lows. Clearly we can see this was the last low that caused this new high right here, higher high, and the market literally made a higher low, came to this demand right here, and after mitigating this demand, it is now rejecting or not, we have to look at that. But yeah, kinda looking like it's rejecting. But what we'll do, we'll go to DXY as always, and on DXY we can clearly see the Friday candle is not that clear. The market didn't change character to the upside yet, and it also, to me at least, it's looking like a left head and a potential right shoulder. Head and shoulders are market structure, which if you trade or don't trade head and shoulders, doesn't matter. It is a market structure. Obviously if you are taking a reversal trade, you wait for the head and shoulders to occur, bro, because that's the market structure. So now going on, the daily bias on Monday was bearish, looking not one of the cleanest, but only because I'm backtesting, that's the only reason I was looking for sales. And if I was looking for sales, I would look for supply zone somewhere around here, because this is the latest market structure. You can argue the 4-hour change character here, broke structure here, the last broken structure was here. So this supply zone we could have anticipated on the 4-hourly, but also I marked my supply zones on the hourly, and Obviously the 4 hourly could be respected, but obviously I like to refine the zones as much as possible, because the market can have its move from anywhere. So now, going on Monday, I was looking for sells from this sort of supply zone. So let me show you what I was looking for. I was looking for Asian high liquidity sweep, this previous structural liquidity sweep, and this hourly supply zone mitigation, then continue towards the downside somewhere around here. And what happened was, clearly Asian high liquidity got swept exactly to the T. And I've also noticed one thing right here was, you can see here, the market was accumulating exactly what we want to see. It's an accumulation. I want the manipulation and distribution, right? We want to be a part of the manipulation and distribution. Sorry, we want to be part of the distribution. We want the manipulation to happen. And I have learned one thing right here. The market was literally not doing anything. It was accumulating. London session kick in, boom, the buyers kick in the market, literally huge buyers. There was previous structural liquidity here to sweep. There was supply zone to mitigate. If you had taken a trade here just for the confluence of this supply Asian high liquidity sweep, this would not be as high probability if it were to react after sweeping this previous structural liquidity and mitigating this supply zone. It is basic, because the market is not heavily bearish, the bias is also not that clear. But even though this was at our timing, so I look for sells. Basically I look for sells, so it didn't play out in our favor, which at the end did play out, to be honest. This was the accumulation, this was manipulation and distribution. It did play out, as you can see. Literally I should have, there is no such thing as should have in trading, but obviously I should have taken a trade here and somewhere around here, but it is what it is. It was a loss. Losses are part of the game, and yeah, you have to bear with it. Only the traders who can take their losses, can create a state of mind that is not affected by the losses or wins, those are gonna be successful. So going on Tuesday now, there was the high impact news rally has now started. Going on Tuesday, I am looking for the GU is not yet clear, so DXY is also not yet clear. Going on, to be honest, on this, okay, Tuesday the bias was not clear, so we didn't take the trade. I didn't even mark the zones on Tuesday. On Tuesday I didn't even mark the zones because I didn't like it. When the price action is not clear, you don't need to force a trade. That's the last thing you want to do, bro. Excuse me. So going on Tuesday, I was not looking for anything. So you can see here, Tuesday was right around here, and on Tuesday the bias was not clear, and also it was CPI day, so it was best to wait for Tuesday to close. Maybe after Tuesday, for Wednesday we will get the bias. And now going on Wednesday, my bias is still not clear because this is a doji, and on DXY it is a bullish candle, somewhat bullish. And if I was looking for something on Wednesday, it will be bearish, it would be sells. On Wednesday, if I was looking for something, that would be sells, because the DXY is very bullish. And with that in mind, keeping that in mind, I was looking for, I went to GU, and even now the GU is still trading from about this high to this low. As we can see, it is literally accumulating, or you can say consolidating. The market is in three phases: bearish, bullish, and accumulation, or you can also call it consolidation. And now we are at the consolidation period, and we don't want to be a part of the consolidation, right? You probably will be knowing that by now. And going on Wednesday, my buy, if I was looking for something, that would be nothing, to be honest. On Wednesday also I was not looking for anything. So now going on Thursday, let's see if something is improved. Also remember there's high impact news on Wednesday, there was high impact news on Tuesday, Wednesday, and also on Thursday there was high impact news. So very low probability day to trade. And Wednesday, now the bias is a bit clearer. As you can see, Monday, Tuesday didn't give the bias, but Wednesday now closed as a bullish candle, and DXY closed as a bearish candle. Now after seeing this candle right here, which is obviously not aligning with our weekly bias, because our DXY weekly bias was bullish and GU was bearish, which is not aligning with the weekly bias. But For instance, we can trade the daily bias, and according to the momentum, according to the volume, we can look for buys. We can look for potential buys on Thursday, which is the only day we get a trade, I guess. And on Thursday there was also federal funds rate news, which was very bullish. And also the market is now out of this consolidation period after this news. I will show you how. And this was the news, a very bullish starting to the day on Thursday, right? There was a huge fair value gap here on the hourly, and I was looking to trade this demand, obviously, which didn't make sense because the market to go down all the way here and also make a move, it's literally irrelevant. Don't even think about it. And so now what I will do is I will mark the closest demand zone. On M30 there was none, and also on M15 there was none. So I would have waited for Asian low to sweep. After sweeping the Asian low liquidity got swept, and this previous structural liquidity got swept, and also we got our M15 rejection right around here. And after getting our M15 rejection, this trade literally took with the trend. This trade was literally taken on the basis of strength of the trend. The market was literally going up loads, right? So whenever the market is going up loads, you want to enter at any pullback because you know that the market is going up. You want to be the bull. And literally the market played out to the T, and we got a 1:10 risk to reward. If I had traded this, it would be 1:10. And I'm just showing you that whenever there's high impact news, you can still take advantage of that, and you can still take advantage of the huge buying or selling happening. If you are at the correct side of the market, you can make lots. So that's what I'm trying to say. On now going on Friday, let's see our bias for Friday. So this was a very low probability day to trade, week to trade, and now this daily supply zone is not relevant anymore because the price is not respected. I have marked it. It was respected once, but now it is clearly not respected. The daily time frame has now broken structure to the upside. So obviously going on Friday, my bias is still bullish, but not that high probability because the price also needs a pullback. We have an idea. And also on Thursday, it has entered the weekly back. It has entered the weekly, or also you can argue the daily demand, breaking structure to the downside again. So going on Friday, I will look for sells on DXY and buys on GU. And also it was not a high probability to trade because of high impact news throughout the day, and it was also not aligning with our daily bias being bearish. So what I did, the 4 hourly has also changed character to the upside somewhere around here. There was a demand right around here, and now I have marked this hourly demand to trade. Obviously I have marked that hourly demand, and also I have, refined the demand zone according to the Asian range. Let the Asian range close, something like this, because as long as the Asian range is not closed, we can't do much. So there was a demand, M15 demand right around here, so I was looking for buys from there, which did end up happening. To be honest, it was perfect. Literally the market, but it was not our timing. Literally it gave inducement, first inducement, second inducement, third inducement. It was a trade due to high impact news throughout the day. I didn't took the trade, but if I had taken this trade, it would have been a winner. But it is our plan, it is in our trading rule that we don't trade high impact news like that, because 3 p.m. there was news GBP, it could have been against us also. So overall this was it was a week filled up of high impact news. And also the price action was not clean at the start of the week, but there is one more interesting thing right here to show, which is the market was literally trading at the previous week low, being the weekly bearish, right? Took the previous week low, and look at this, bro, literally bounced from there and took the previous week high. The market to literally change direction doesn't take time, as we can see an example in this trade. Literally the market was consolidating here, swept the lows, manipulated, you can argue, and then this is the distribution. We want to be a part of the distribution move like this, and targeted the previous week high. And now obviously going to the next week, my bias will be bullish because of how this candle closed right here. And yeah, this was a very good week to learn from when to trade and when to not trade. And also in high impact news, you can catch beautiful trades, right? So yeah.